Apple has become the first U.S. business to reach a market value of more than $2 trillion. The company reached that milestone on Wednesday. Nearly 2 years ago, it had become the first with a $1 trillion valuation. Shares of the stock have rallied more than 50% this year. Just last week, Apple announced it would split its stock for the 5th time since going public. Tesla is another company splitting its stock at the end of August. It will be the first time that the company has done so. Tesla shares surged past $2,000 on Thursday. For more on all of this, let's bring in Akiko Fujita. She's an anchor and reporter for Yahoo Finance. Akiko, good to see you. So can you explain to our viewers what exactly is a stock split and why both of these companies are taking this step now?
Yeah, so it's essentially just what it sounds like. It's splitting a stock up in fours in the case of Apple, 5 in the case of Tesla. So if you think about a stock kind of like a pizza, and you're talking about Tesla's record today, $2,000 a share roughly, there's not a lot of people who can access that and can buy that. And so really a stock split is all about accessibility and affordability. In the case of Tesla, if you split that up in 5, you can actually buy a Tesla stock for $400 a share roughly instead of $2,000. In the case of Apple, it's about $110 or so instead of the $473 it trades at right now. And for the companies, they have seen a huge boost. You just pointed to those numbers right now. Tesla's surge of 25% run up this week alone. We've seen it up 40% since the stock split. In the case of Apple, the stock has run up more than 25%.
Akiko, do you expect to see more companies split their stocks? Amazon, for example, which now trades at nearly $3,300 per share.
Yeah, I mean, there's a number of companies that we can point to within the S&P 500 that are trading above that $1,000 a share level that could potentially look at a stock split now that they've seen the success from a Tesla as well as Apple. Amazon's certainly one that you pointed to, one that a lot of people could potentially be looking at it, even though they haven't done it. This is an expensive stock at more than $3,200. So if you split that up, that improves the access for those average retail investors who may want to get in on the company. Another name that you could look at is Chipotle. This is a stock that trades at $1,239 a share. And then another big tech name, Alphabet, which is, of course, Google. That stock is at $15.81 a share. So look to some of those names in the S&P 500 who could potentially flirt with this idea now.
You know, I think it's really confusing for a lot of people to see these stock prices just going through the roof and these companies doing so well when the economy overall is suffering so much due to the pandemic. Can you help to explain this a little bit for people who might be confused?
Yeah, there's been a lot of talk about this divergence between the real economy and what we're seeing on Wall Street. A lot of that can be pointed to the Fed and the stimulus that we've seen thrown into the market here since the pandemic began. So let's talk about the balance sheet from the Fed. Since March, they have expanded that balance sheet from $4.2 trillion to $7 trillion. Now, a lot of the asset purchases for the central bank is in bonds as well as mortgage-backed securities as well as corporate bonds. But what we have seen is as the Fed has put the money in there, there's a lot of people potentially who are looking at fixed income who aren't seeing any yield there, jump into the equity side of things in search of yield. So that's one way to explain just the sheer amount of liquidity in the market. The other theory a lot of analysts I've been speaking to have been pointing to is just the retail investor as well. You've probably heard this story of a lot of investors who are at home, maybe looking to get into the market for the first time, using that $1,200 stimulus check to put their money into the market. And that has led to some unusual trades. Just to give you an example here, we've got about 25% of retail traders or traders who are making up the overall market. So we're talking about retail traders, mom and pop traders who are sitting at home. Last year, that number was about 10%. So that gives you a sense of just how the market makeup has changed.
Yeah, wow, 150% increase in that number. That definitely tells a story. So for people who are perhaps those new mom and pops or those folks who have a stimulus check and are looking to invest in the stock market, what are your suggestions for them?
So the thinking is always when you invest, you want to invest long term. You don't want to be that Robin Hood investor, as we've heard, who's kind of putting their money one day looking to flip it the next day, because there's so much volatility in the market right now. It's certainly not a smart way to invest. You always want to invest for the long term. In terms of some of the names that we have seen push higher, these are all of the work from home trades is what we call it. We're talking about companies that have benefited on the back of the shift to work from home. Companies like Zoom, a lot of people doing their Zoom calls, more and more people using it. That's one stock where we've seen a big pop. Slack is another name. Microsoft, a huge beneficiary on the back of this work from home trade. Not only are they seeing huge growth in cloud, they've seen a growth on the messaging side of things with Teams as well. So you're going to hear a lot of the big tech names as the big growth stocks that investors are going to be looking to. And then, of course, the flip side of what we call the coronavirus trade is some of those big biotech firms that have been developing these COVID vaccines. That's a trickier play because there is huge upside when you think about a company like a Moderna or an AstraZeneca or a Johnson & Johnson. If they find success with their vaccine candidates, no question that could be a huge boost for the stock. But it's also been met with a lot of volatility because we have seen investors chase the day-to-day headlines on this race for the vaccine.
All right, Akiko Fujita, thank you.